This is Daria Shabbat with CorporateProfile.com reporting on the news for Monday, March 19th. The Wall Street Journal reports in the latest sign of the government's gradual retreat from financial crisis-related programs, the Treasury Department is expected to announce today that taxpayers reaped a $25 billion profit on mortgage bonds purchased at the height of the meltdown. The profit is the Treasury's biggest for any program tied to the 2008 to 2009 crisis. The government last week sold the last of the bonds, winding down Treasury's ownership of debt backed by the federal-backed mortgage investors Fannie Mae and Freddie Mac. Treasury spent $225 billion on purchases over 16 months before it began selling the securities last year. Officials said the effort shows the government can unwind a rescue program without roiling markets. How asset prices might respond to the eventual curtailment of government support has been a tense subject for investors in recent years. The Wall Street Journal also reports Apple said today it would pay a dividend to shareholders and buy back up to $10 billion in stock, heeding calls for the technology heavyweight to deploy its massive cash pile. Apple expects to initiate a quarterly dividend of $2.65 a share sometime in the fourth quarter. Additionally, Apple's board authorized a $10 billion share repurchase beginning on September 30th. The repurchase program is expected to be executed over 3 years. As of the end of December, Apple's cash equivalents, and short-term and long-term marketable securities totaled roughly $97.6 billion, more than the market capitalizations of all but 52 publicly traded companies at the time. That was up from the $59.7 billion in cash that Apple had on its balance sheet the year before. Shares were halted in pre-market trade. Apple's stock has risen sharply in recent months in anticipation of a change in the company's approach, and as it has posted quarterly revenue and profit records on brisk iPhone and iPad sales. The shares closed at $585.57 Friday, up 45% since the start of the year. Bloomberg reports UPS raised its offer for TNT Express by 5.6% to 5.16 billion euros to secure the biggest deal in the U.S. company's 105-year history and challenge Deutsche Post AG. UPS will pay 9.5 euros a share in cash for the region's second-largest express delivery company, up from a bid last month of 9 euros per share. Buying TNT will be UPS's biggest purchase since the company was founded in 1907 as a bicycle messenger service. The deal tops the 2005 acquisition of Overnight Corp for about $1.25 billion in cash, which gave UPS the ability to make U.S. land shipment of parcels too large to be lifted by a driver. UPS controlled 7.7% of the European Express parcels market in 2010, compared with TNT's 9.6%, according to the industry researcher Transport Intelligence. Combined, they would be about as large as DHL, which had a 17.6% share. I'm Daria Shabbat with CorporateProfile.com reporting from Wall Street. Thank you for watching, and please tune in again for more hot financial news.